Hope everyone's doing well. This is going to be a short video over May the 10th. So coming into the day, market gapped up, testing the prior day's highs. Doji bar and probably going to test lower. Not a great stop entry short. Bear bar, but it's a doji. Bulls bought more lower, made money, so it's a sign of weakness and a possible leg in the trading range. Bear bar, but making a micro double bottom, down, up, and that would create kind of a second entry buy. Give up bar, 3 consecutive bear bars. This is a reversal bar closing on its low on the 15-minute chart, but 50% of the time the first reversal down fails or first reversal up fails, and you get a major reversal. 80% of the time you get a minor reversal, so that means we know 50% probability we get a major reversal up to here and possible bull trend. 80% chance we get at least something minor, so maybe just a small bounce. Here, it's a micro channel, but it could be a second entry buy, so plenty of traders will exit above this bar. It's hard to buy above it because of the 3 consecutive bear bars and the 5-bar micro channel, and you're also right above the moving average, so you may have to have another leg down, which create a wedge. 1, 2, 3. Big bull bar closing on its high. It's a probably always in long. It's a credible. Is it buy the close? Probably. You can take it for a swing, testing the open of the day, and may reverse up. So some bulls will buy, stop maybe down here below. Follow through, probably always in long. But again, you have to question strong entry bar, smaller body. Is this a vacuum test of the low of bar 1? And are we going to form a lower high here? A lot of bulls want to buy at the moving average, and you've got to be a little leery when, if the theoretical stop is here and it's right at the moving average, it's a magnet. So you don't want to put your stop right where a obvious magnet is in the market. Second entry short, so rally, pullback, another rally, pullback. So you can kind of see it as it's a low too short on a smaller time frame. Kind of like here, down, up. Even though it's a micro channel, it's possible lower high and a failed breakout of the swing high up here. So credible short. Bulls probably get out below the bar. And you can see bulls that bought the close disappointed, got out break even, and starting to go sideways. Bear bar, another bear bar, trying to form a double bottom. Possible 3 legs down, 1, 2, down, 3, or 2 legs down, but not a good buy signal bar, probably forming a trading range. 3 consecutive bear bars, and then we broke below. So at this point, you can see after 3 bear bars, the bulls, they couldn't get a strong stop entry, and the bears broke below. So now traders are going to wonder, are they going to get a measured move down? Is this the neckline it's a double top? Here's the neckline. Obvious measured move target, close to yesterday's close. So it's a reasonable magnet. It's sell the close, follow through minimum, but still follow through. Now we have a big bear, it's big bear bar, big bear body. It's parabolic. So consecutive sell climax is here, pause here, pause here. Tight channel first up's going to fail. Still not quite to this measured move target, so probably we'll get there testing the close. So we're at support, but this is too strong to be buying. Better to wait for the first reversal up to fail and retest. So if you're buying here, it's really not that great of a buy. Some bulls will buy, use a really wide stop, but not ideal. The market still may have to get below here. And you can see the bulls that bought the close disappointed. The bulls that got trapped were front running. They bought the close instead of above the bar. You can see it never triggered. But the bulls that bought, if they were quick, they got out of break even. And the market's going lower. And then boom. So what happened right here? This is important. In theory, some bulls will buy this close or buy the low and look to buy more, possibly lower. So maybe the low here, or there's several ways. most importantly, though, is the low of this bar. So the bulls that bought this low scaled in lower. It's a perfect measuring gap, so you have to be open to the possibility that the bulls may get a measure move down. Probably won't, but it's possible. Now the bulls have a second entry buy, probably going back up to here. So a lot of bulls, if they did buy, they would, they probably wouldn't buy above that bar. They might, with it being a failed breakout. But after four consecutive bear bars, a lot of bulls would rather wait for a smaller bar and a second entry buy here. You have to question, though, whenever the bar, it's allowing you to sell. It's a second entry, so in theory it's higher probability, but it's allowing you to buy at a better price. And you have to wonder about that. Normally, if you wait, you have to pay for probability with worse risk. And this is not worse risk than this, but it's an okay buy. And there you go. So it did trigger, went outside down, and reversed up. So a little bit of a sign of a trading range. Formed a micro double bottom, broke to the upside. And you can see formed another bottom. And the bulls, if you notice here, the bulls they're not doing enough. Now, this is also not a strong trend line break compared to the sell-off. So this might just be the minor reversal up, and then we maybe get a failed breakout and then turn up. So breakout below a possible final flag, reversal up. So it's credible buy, failed breakout below these lows. You can argue it's maybe a failed breakout below these lows. Maybe we'll test up something like this. Anyways, credible buy. And one thing to point out, let me catch my voice for a second. One thing to point out is when you're taking a swing buy, when you're taking the first entry in the major trend reversal, especially when it's early, you may have to sit through a lot of pullbacks. So it's very common to get a couple bars up and then this. And so you don't want to get out here. You want to trust your stop. And then always in long, strong breakout, but a test of the trading range up here. So probably going to go more sideways and stay within a trading range. You can see maybe we tested some form of a channel and really just went sideways in the close. So whenever you're long here, you don't want to have a stop all the way down here because it's bad risk reward. Therefore, traders have to get out early. Maybe somewhere up here below this bar. Certainly, somewhere in here. Because the odds favor a trading range. So I hope this video helps.